Welcome back to Morning Trade Live. Time to go inside out on Nvidia, looking at the semiconductor space overall. Matt Bryson, Managing Director, Equity Research and Hardware at Wedbush. There were some reports that Nvidia wants to slow down some of the production. At first, they were sending the chips once again to China. Now it seems unclear what kind of chips, if any, will be headed that way. What are your thoughts?
Yeah, Nicole. So you had the information reporting that they've asked some of their suppliers to slow down or halt production. Remember that when the Trump administration prevented NVIDIA and AMD from shipping chips back in April, that announcement came kind of out of nowhere. So NVIDIA has a lot of product already. They also have a new product based on Blackwell coming out, I believe Q4 this year, Q1 of next year. And so part of the task that NVIDIA faces is figuring out exactly how much production they really need over the next couple quarters. So certainly I think that China's desire to keep its companies from buying NVIDIA chips is weighing on NVIDIA sales in China. At the same time, I think NVIDIA is shipping something in China. It might not be the 8 billion that they were planning to do in Q2, but I think that they are shipping product, and it's more a question of how much finished product do they really need, given what they have for inventories before they start coming out with new chips.
Understood. I mean, at this point now, is NVIDIA still the leader in your mind? I mean, what kind of target do you have here?
Oh, yeah, no doubt. NVIDIA is the leader in AI. I mean, from a China perspective, you certainly have Huawei, who is supplying to China. Our models, the shifts we made to start to account for some additional China revenue, it was only like a billion or so per quarter this year versus, again, in Q2, they were looking at doing $8 billion. So does Huawei have more share in China? I wouldn't be surprised, but from a worldwide perspective, NVIDIA is still by far the dominant player.
Understood. I mean, you have a 210 price target at this point. How long does it take to get to a price target like that? And the catalyst, I mean, we do have the big unboxing, the unveiling of maybe a brain. What is that on August 25th? Are you anticipating something wonderful?
I don't know what we get on August 25th. I mean, what we do know is NVIDIA has its new Rubin products that ship next year. Just heard in the news last night that Jensen was talking about having 6 chips that have been fully taped out. There was some speculation that might be delayed. It doesn't sound like there's any delays there. It sounds like NVIDIA is on time, which, again, as long as they continue to execute, it makes it really, really hard for people to catch up to them. In terms of the stock gain to my price target, it's always hard to tell exactly how the stock will move, but I do think when we're looking at Q2 results, Q3 guidance, that all the feedback I received in Q2, whether it was from the NVIDIA supply chain, whether it was the numbers that we got from the cloud service providers in terms of their spend, it was pretty much ubiquitously positive. And it sounds like Blackwell Ultra, their next product, is not running into any of the challenges they encountered with the first generation of Blackwell, that is ramping well as well. So if anything, NVIDIA's tend to be conservative with their guide in the past, and with everything seemingly executing well, would still expect we get a beat and a better guide, given that's what we've seen historically when these guys execute.
Yeah, when they report next week. I mean, we do have Jensen Huang in Taiwan. He was telling reporters that the H20 chip is not a national concern, security concern. Also that he's working with the Trump administration to try and push forward the Blackwell-based chip. We heard some of that. At the same time, Trump and his administration have alluded to the fact that these are the same chips. They're same, but they're not. They're less than or something. And I'm sure the Chinese are not buying that. They don't want a chip that's less than. And so that becomes an issue too. But the Blackwell chip going to China would be a big deal, wouldn't it?
Oh yeah, certainly. I mean, it kind of been assumed that Nvidia revenues would slow down over time, just because they have this static chip that they're shipping. Well, clearly technology continues to progress. It now sounds like that there's a next generation product that would hypothetically be a bit more advanced than what they're shipping now. That gives them a far longer revenue stream going forward. And I think the thing to remember with NVIDIA is that their CUDA software is what everyone's trained on. And so it gives them a huge advantage selling in any geographies. And I think that's in part why they've been able to get traction in China with the H20, even though it's not as powerful as the H100. And it should give them some room to get revenue in China with a B30 or a B40, even if they aren't as powerful as the B200 or B300 chips.
Right, understood. I mean, when you think about the order of the names, I mean, AMD has been a formidable name. I'm not sure if I want to say the same competitive scope and size, because it's not, but it has been growing. In your mind, the semiconductor leaders are the ones with the buys or strong buys, are which ones?
Yeah, so I mean, with Nvidia, they are the dominant player, right? It is their market to lose. We've had a buy on them for some time, still have a buy on them. With AMD, there's a whole lot of opportunity should they execute on MI 400. Remember, their share is in the mid to low single digits at this point. There's certainly room for a second player to have more than 3-4% share. And if they get to work, there's a whole lot of room for them to grow. We have a buy on that stock as well. I personally think that AI gains traction, and that within the next 18 months, there's somewhat limited risk around a number of these names, simply because we not only have the CSPs telling us they are spending more money, continued growth from sales into that customer base. But you have all these new sovereign data centers that are going to spend money, that are going to layer on top of the CSP spend. And so I think that gives the industry an 18-month plus buffer, if you will, to get real applications developed that drive future growth for AI.
Okay, Matt Bryson of Wedbush, thank you so much. Great to see you. Appreciate it. Now it's our time to have a trade here. We have an example trade for you of Nvidia, and Tom White, host of Fast Market, is here with me to take a look at this name. I mean, you saw his price target above $200. Where do you think this could be headed? How do you trade Nvidia, an example trade?
Well, I think a lot of speculators, even though stocks pulled back pretty significantly this week and it's off of those all-time highs, I think a lot of people are speculating that it's going to go back to those all-time highs, maybe get above it, about $184, $185. So I looked at a strategy that takes advantage of earnings next week, but then gives myself some duration. I don't want to pigeonhole myself just to those results in case the stock doesn't move higher post earnings. It gives you some time for this to kind of play out and maybe get back to those all-time highs. So going out to the September 19th, the monthly options here. So we've got 28 days in this position, and implied volatility levels, after the earnings event, they're going to be lower, right? And going further out in duration, implied volatility levels are lower because you don't have that event risk. But there's still some implied volatility levels in there. So going out to the September 19th, monthly options that expire in 28 days. Buy the in-the-money 170 strike call. It's got that higher delta. It's going to react more like the stock. And then against it, sell the 185 strike call. So a bullish $15 wide call vertical here. You're going to pay roughly, I've got about a $6.80 debit. It might be about closer to $7 right now. But the debit you pay is going to be your risk, right? If you pay $6.80, $680 in risk, where you can make up to $840 on that trade if it goes up to 185. Now, the break even's only about 2.5% above the current share price. So you don't need a monster move to the upside. And by going out in duration, Nicole, you're actually giving yourself some flexibility as far as trade management goes. Because if you get the move that you want and it goes maybe back above 180, maybe even above 185, that's going to expand the price of this vertical spread. That allows you to close it ahead of expiration over the next 28 days also. So it gives you some flexibility here.
Okay, Tom White, it's great to see you. Thank you for that example trade there on Nvidia ahead of the earnings that are due out next week. And of course, Tom, I know you'll be listening for Jay Powell.